markets trembled as President Trump introduced his surprising Liberation Day tariffs, causing widespread panic. The Dow Jones Industrial Average faced a staggering plummet, dropping over 1,000 points in just one day. Investor confidence shattered, especially in tech stocks, with the Nasdaq Composite spiraling down more than 4%. The S&P 500 index also suffered, forecasting a troubling future with a dive of 3.1%. Amidst the chaos, tech giant Apple found itself in hot water as shares plummeted over 8%. Concerns escalated regarding supply chain disruptions, especially with China being a significant manufacturing hub. Trump's tariffs resulted in a jaw-dropping 54% tariff rate on goods imported from China, sending shivers down the industry. Technology stocks such as Nvidia were not spared, facing alarming declines due to similar supply chain fears. With 185 countries impacted, this marks the highest effective U.S. tariff rate seen in over a century. The global market quaked as fears of retaliation from trading partners loomed large, threatening a full-fledged trade war. European stocks mirrored the anxiety, with the pan-European stocks 600 sinking over 2% in response. Asian markets weren't safe either, with Japan's Nikkei 225 suffering a significant decline, reaching its lowest since last August. Back in the US, major retailers like Walmart and Nike faced immediate repercussions as their stocks dropped significantly. Worries about supply chain issues, particularly from Asian manufacturing hubs, dominated Wall Street discussions. Oil prices followed suit, tanking over 7% as OPEC Plus decided to hike supply more than previously expected. The hikes in oil supply contributed to fears of an economic downturn, intensifying market insecurities. Trump's announcement led to a steep drop in oil futures, fueling worries of slowing global demand for crude. Jobless claims data hinted at economic strains, revealing a slight dip but revealing rising continued claims. This marked the highest level of continuing claims since late 2021, showcasing the underlying unemployment issues. A sudden spike in job cuts highlighted the shift, with Elon Musk's Department of Government Efficiency contributing heavily. As for the auto sector, it braced itself as Trump's 25% tariffs took effect, leading to steep losses. Tesla's stock felt the impact first, slipping by 5.8%, compounded by lagging EV sales in key markets. American automakers, like General Motors and Ford, experienced declines as they faced similar tariff pressures. Retail giants, including Nike and Adidas, suffered losses again as tariffs targeted their Asian sourcing hubs. Even commodities took a hit, with copper prices falling as worries about demand dampened market sentiment. Gold saw a retreat from its previous highs, joining other assets in the sell-off induced by tariffs. Trump asserted that big tech's investments in the US would counterbalance his tariff initiatives, but reactions remained mixed. Tech leaders, including Apple, pledged vast sums to bolster domestic operations, despite their stocks following downward trends. Wall Street's response to Trump's tariffs was undeniable. Traders scrambled to assess the impending repercussions. Investment analysts indicated ongoing navigation would be necessary for companies to adjust to this new world of tariffs. With stocks forecasted to remain under pressure, the anticipation for major negotiations heightened across the board. For investors, the future remains uncertain amidst tariffs, trade wars, and economic strain from recent market shifts.